I would suggest this is actually the perfect opportunity to get working on things like your day trading plan. This was a really interesting scenario. I think I walked you through this. This was a really cool example of just following volume impetus. The sellers just went absolutely nuts, and this was a nice bear div. And we had oil inventory numbers come out, and on the release of the inventories, we completely puked out below this trend line on massive selling volume. And so really all I said to the room was, all right, we got to rally back into resistance. Give me any kind of sell signal with the moving averages pointing down. And actually, I even saw, it was funny, I was sitting on flipping through. Now YouTube's kind of got the TikTok video thing going. So you just flip through and they're like little 10, 20-second little videos. And the guy's like, hey, look, you can trade moving averages. Every time the 20 and 50 cross, that's the direction you go, and you just hit the 20-period moving average with whatever direction the two moving averages in. The guy gets 1 million subscribers and 10 million likes, and oh my God, he's a millionaire now. And it's just such a simple approach. So this was a really good example where we had EIA. We had a big fundamental event. You're not allowed to take the trade ahead of time. And if anything, what a great analogy. How many poor noobs ahead of that big fundamental event went and bought crude through here and literally had their heart torn out from them? What was this bottom a manufactured trap? I think so. I waited for the release. The release came out. The market broke. Bearish market structure, lower highs and lower lows. And then we just simply said, okay, you know what? All we're going to do is just wait for the moving average tag. As soon as we get any kind of 3-bar fractal, let's go with that trade and that trend. And actually, it looks like it's turned out very nicely. So this is a really good example. The risk window is actually extremely small. That's the one thing I really like about these 3-bar fractals. And if you can get a 3-bar fractal that develops right off of the moving average, you can see the moving average relationship is negative. That's not a bad trade to take, you know. The model that I'm running now, oops, and actually this should be right there. I like 3 of the micros. I like to make sure that one order by default goes at 2-to-1. So whatever this fractal, because keep in mind, if the market had fired the fractal signal, then jacked up here, I would have had to take a full loss. And I hate when that happens, but it does happen. So force myself 2-to-1, 1 goes out, stop goes to scratch. At that point, you can sort of breathe a sigh of relief. Okay, it doesn't look like we'll be losing money today. Then what was interesting about this, I pointed it out earlier, was you can see A, B, C, D. Actually, this market was projecting down into here just off of this failure, but we actually had a huge A, B, C, D. That was this one, A, B. And as we said, on the EIA release, that's what this one is here. So A, B, C, D, that actually painted this objective. So on this massive A, B, C, D, that was the second contract. And the rule was AOCO. We're just going to let this thing go on whatever that A, B, C, D objective was. And it was a big win. Keep in mind, that is a 7.5-to-1 risk reward on that trade. Wow, huge winner. So kind of lucky on that regard. That's this one. Boom, 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 boom. In essence, can you kind of see how not only the red ABCD, but also the blue ABCD, they were both pointing to basically the same level. So pretty high confidence that we were going to zip down into there. So it was interesting because this is right around the euro close, and we were all conjecturing, what are the Europeans today? Are they long or are they short? This was kind of a Now, this is one that I don't know whether you can really infer too much into the market because the Europeans, they came online here, right? That's basically the start of their day, right around midnight my time. So you can see the Europeans put a bottom in the market and they were bullish. And then you can also see that about halfway through their session, they pulled the market back, and I think they were still feeling pretty good. So you notice there's Mountain Man. There's also another double bottom for another run up top. And then, oh boy. Right. And actually, you might even argue, good point there, whoever mentioned that. I don't know whether you mentioned it or not, but you reminded me. Maybe this was basically a bot. All right. Boom, 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 boom. Look how almost textbook that move was. It's almost ridiculous how textbook it was. So if we go bot trade, there's the 25 level. There's one low, two lows. That would have been difficult to take. I'm not going to sugarcoat it. Also, too, that would have been a tough trend line trade break to take. But nonetheless, A, B, C, D. And then, here's the funny thing. Did this market stop because of the bull A, B, C, D? Boom, 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 boom. Target hit. Or did it stop because we had some absolutely train wreck bearish econs that came out?